I'm ABC 15 data analyst Garrett Archer, and I'm taking you inside the numbers on the 3% GDP growth and why the numbers behind it are a bit more complicated right now. So this one definitely requires some explanation. First, a 3% quarterly growth in gross domestic product is nothing to sneeze at. It's higher than the average of the previous 10 quarters. But just like last quarter, the administration's Liberation Day tariff announcements had an enormous impact on the inputs that go into this number. Let me show you what I mean. Quarterly GDP growth in 2023 and 2024 ranged anywhere from 1.6% to 4.4%. Last quarter showed the nation's GDP shrinking by 1/3%, and this quarter we are posting this big turnaround of 3%. Here are the numbers behind that 3%. Consumer spending, the biggest part of our economy by far, grew by 1.4%. Private investments, which includes things like buildings or research and development, that's down by a huge 15.6%. Government spending barely changed, and exports fell by a very small 0.2%. Imports, now this is the tricky one. They contributed 5% to the calculation. So imports grew then? No. Analysts do not want to double count products, so imports are subtracted from the GDP. After the Liberation Day tariff announcements, companies loaded up on pre-tariff products. Imports rose by a staggering 38%. With warehouses loaded up and Chinese tariffs imposed, imports fell back down to earth, a correction of 31%. In real money terms, the U.S. imports $240 to $280 billion worth of goods each month. In March, that number spiked to $342 billion, fell back down to $276 billion in April, and stayed there in May. So it's been two wild quarters for the GDP as companies adjusted to the Trump administration tariff policies. The good news is consumer spending is still growing, which means that even with the noise from imports, the economy is still growing. With a look inside the numbers, I'm Garrett Archer, ABC 15, Arizona.